Hello, welcome to CHI Borders YouTube channel. My name is Cole. I am going to talk about essence of the US exit tax today. Quick and very handy video for you to understand what the US exit tax is. So welcome, let's get started. First, you have to meet one of the three conditions to become a covered expatriate. One of the most important conditions is at the time of abandoning your green card or at the time of your loss of US citizenship, your net assets worldwide does exceed $2 million. If you meet that particular criteria or one of the other two criterias, then you would become so-called covered expatriate. Now, there are four ways. If you are covered expatriate, you get hit by US exit tax. So what are those four? First, if you have any unrealized capital gains in stocks or real estate and securities and so forth, you would be getting taxed at capital gain rates. There is a big break here because of the annual exclusion amount. 2025 annual exclusion amount is $890,000. So up to your unrealized gain, up to $890,000 in 2025, exit tax will not be your concern. So the other approach about this particular exclusion is for you to maximize your unrealized gain, but not to exceed 890,000. 890,000 changes probably will increase 2026. So it changes every year. Now let's get to 401k or similar employer sponsored qualified retirement account. This gets taxed at the time of distribution at 30%, regardless of income tax treaty provision by you filing the form called W8CE. So, in other words, you can defer taxation until you take the money out. Each time you take the money out, then you pay 30% of taxes. So that's a good thing. On the other hand, if you have an IRA and exit the United States, you get taxed by ordinary income tax rates that could be very, very high. Well, getting back to the capital gain, let me get back to the capital gain rates. Capital gains rates, changes if it's a short term versus long term. There's a big difference, and also the amount of your capital gain would make changes in your capital gain tax rates. So you gotta talk to your tax advisor. Anyway, IRA, getting back to the IRA questions, ordinary income tax rates, and there is no election to be deferred, meaning even if you haven't withdraw any money from your IRA, the government will treat it as if you take the entire amount out before you exit, and therefore you pay ordinary income tax for your IRA. Okay. Most recent legislation is covered expatriates makes gifts and inheritance to U.S. resident, U.S. Children living in the U.S., U.S. citizen, U.S. green card holders, or persons who are living in the United States exceeding or meeting substantial presence test. Then the tax rate for this giving is 40% over annual gift exclusion amount. I think it's 18 or $19,000. I think this year it also changes each year. But the gift amount minus annual exclusion multiplied by 40% is your tax. But you can also use foreign tax credit. If you end up paying similar taxes to foreign government, then you can reduce the U.S. This covered expatriate taxation by the foreign tax credit. So these are the four major types of U.S. exit tax. Now, there are always small exceptions to it. Therefore, I have to put a disclaimer. This video is provided for educational purposes and does not constitute tax advice, legal advice, or any other professional guidance. So, the information when you look at this video, maybe 2 years from now, or may not be the most current developments, and we make no representation or warranties regarding the accuracy or completeness of the content. We cannot be held responsible for any action taken or not taken based on this material. You should consult with a qualified tax advisor, attorney, or other appropriate professional regarding your specific situation. At the CHI border, we offer half an hour complimentary online meeting. The booking site of this meeting is here. I encourage you to take a full advantage of this link and ask your questions. Although we cannot be responsible for the answer, but you can talk to our professional advisors and your questions. You may have some additional information about your questions and your plans and so forth. So it's a value added for you. At the same time, as a service provider, we can find out more about how the cross-border individuals and their families are coping with U.S. International tax laws and their issues and problems and questions. We can find out from this meeting. So we enjoy and we appreciate you share your experience. Of course, we keep everything under confidential mode. So please take a full advantage of this one time only for one person opportunity for an online half an hour complimentary meeting. And this is our contact details of our firm. Please expect us to present you additional and more exciting and informative educational YouTube videos. So thank you very much for watching and have a wonderful day. Take care.